Hi guys, we are doing another recap video. Today is the day before Thanksgiving, November 26th. As you can see here, I wrote that I took an eval trade, which just means I took a trade on my evaluation accounts rather than my funded accounts. I'll get into why I didn't take it on the funded. But first, let me go minimize this, make it a little bigger. Let's look at the higher time frame. I think it's a good place to start from. As we can see from my previous video, I was calling out how we were headed towards these equal highs up here, and today we hit that. So obviously, with that in mind, um, pre-market, I was still anticipating a bit of a pullback, but overall, I was waiting for that to be today's draw. So keeping that in mind, I was mainly looking for longs. But let's dive a little lower into this. Let's see. Okay, just want to check this out real quickly. Is there anything on the side? Oh, this loading. Okay. Um, so as we can see, the market opened. I'm gonna go on the 5 minute actually. So market opens, not really doing anything good for the first 15 to 20 minutes. It's kind of moving sideways. And then we get the sweep of the new high, then it starts dumping. This is where it kind of gets tricky. Because when you see this aggressive move, you anticipate it to come and grab these bottom lows right here, which is like the most obvious draw the market would have. The reason I feel like it doesn't go that low is because obviously we have the overall bullish bias, but if we go down to maybe, let's see, this time frame, the 15 time frame, oh, sorry, the 15-minute time frame, we can see that the reason the market really did a fake move to the downside and caused a lot of people to go short, but it really still kept the structure instead of taking those lows is because we had an M15 fair value gap here. And as you can see here, not only did it only wick into it, but like the none of the bodies on the 15-minute time frame even got close to like what's it called, inverting that fair value gap. So when I'm seeing that on the 15-minute time frame, as you can see, we have like a three candle formation going on the M15. This candle was kind of a disappointment. I was really anticipating this to be like, closing above like that, but never nonetheless. But so so we have that. So that means this is a protected low down here, and we're bouncing off this fair value gap, knowing our draw is still clear up here. So with that in mind, I go to the M5. I've been trying to go based off M5 structure lately, so I don't get lost in the M1. I don't know if I mentioned that yesterday, but as we can see here, we come. Actually, I'm gonna go to the 1 minute really quickly just to show something else. Oops. When that happens, okay. Okay, so if we're looking at just M1 structure, no other overall bias, we can quickly, or just we could assume that top key was it? Okay, we see the sweep right there. We see the market shift the structure. So then you anticipate a pullback to this FEG, and it's gonna dump downwards. It's gonna continue to get those lows, but that's literally where the trap is at. And another good indication that this was a trap, if it wasn't for the M15 still holding structure, was if we can go to the ES, let's look at the timestamp right here. It's 10:05 for this candle closure, correct? So if we go to ES, let's see where's it right here, and I try to find that same 10:05 candle. That is right here. As you can see, this does not really give it that bearish thing on it, feel for it. And on top of that, kind of moved it to the side. Let me do replay. Start new. Okay. And then as you can see, not only is this not like a complete bearish move yet, but also we have true day open on ES and it completely held. It just wicked down and came back up. So that's also giving me another indication that the market's holding and we really do want that bullish move up. So if I'm seeing that on my other chart. So keeping that in mind and keeping out the overall bullish bias. I'm not gonna lie, today's market structure, it had great moves, but it was a hard one to read, the price action. So we're keeping that in mind. We come here, almost creates another fake move down because this is reacting off nothing. This could technically be an order block, but I mean, best you would get is probably a break even. That's nothing good. When it gets really interesting is here when we have this huge bullish move up. I was trying to go long here. I think I was waiting for like any wick below this to tap the FEG, and I was gonna try to go long, something like this. To those highs would have been great. Unfortunately, Top Step, uh, the prop firm was down on my funded accounts, so I wasn't able to pull the trigger on going long here. I think this would have been a pretty good trade up long. So that's where I missed on the funded. And then after that, I'm like, okay, I missed the trade for a whole day. And I was just looking at my eval account, trying to take advantage of the prop firms having the big sale. And then I noticed that we come back to this after. Okay, let's actually go back to the M5. So when that happened, you can see we left this FEG here. And then this M5 is forming this doji candle before it like starts rocking up to our draw for the day. So all that kept in mind, right? We see that it touches this order block. This order block was more prevalent on the M3, as you can see here. But I'm gonna go based off the M1 because that's where I'm entering the trade off of. So I see that. I see that we're having the bullish, we're respecting the bullish P raise. We have the overall higher time frame draw liquidity up here. What else? We have the M15 stop or FEG here. We have the M5 about to create a three candle formation. So with all that, I anticipate this would be our bottom here, tapping to the order block to create the new high. So I get into one contract here at 10:48. Then I get into another contract, I think as soon as this candle closed, which was like 10:50. And if I'm not mistaken, I got in my third contract when I started pulling back here at the 10:56 mark right here. Started looking close, but I like the order flow. So then I kept the trade until, well, since it was an eval trade, I was really just going pretty heavy, trying to maximize the gains. I ended up making what I need of the 2000 for the eval trade. We took that long, and obviously I would have held it longer all the way to my draw because you can see clearly hit that. Only reason I had to sell early because of the daily profit goal I have to hit on the evaluation count. But that was overall the trade. Now I feel like I gave a pretty good understanding of where my mindset was and how I saw the structure of this taking place and how this was something you have to avoid, understanding the overall market direction and not getting faked out because the draw is like so like a few pips away, thinking that's what the market really wants. When in doubt, that's not what it wants. I hope you guys enjoyed the video, and bye.